Good morning, everyone, and welcome to Weekly Profit Talk. As the name would imply, we do this every single week. We do this every week on Wednesday at 8:30 a.m. Mountain Time. That is 7:30 if you're on the West Coast, 10:30 if you're on the East Coast. Good morning, everyone, and welcome. This week's topic for Profit Talk, private practice financial thinking by trimesters. Now, this is something I kind of introduced this idea a couple of years ago, and it's a good time to come back around because um, though we've got about a week to go here before April ends. Um, Basically, it's coming to a conclusion, and May's right around the corner, and with it, Memorial Day and all the wonderful things that summer brings. But another thing that I like to look at in terms of fiscal success is breaking up a year into three segments. So the first segment is January 1st through April 30th, trimester number one. Now, it's of course not to be confused with a OBGYN trimester, which is generally 13 weeks long. In this case, it's 4 months or one third of the year. The first trimester is characterized largely by being tax season. And with it coming to the close, I just can't tell you how thrilled I am that tax season's over. So um, let's go ahead and talk about this a little bit. Just give me a quick second here and I'll bring some stuff up for you. So, private practice financial thinking by trimesters. Um, so first of all, the numbers inside the numbers. Before you prescribe a treatment, you read a chart. Same rule applies to your profit and loss statement. Pull your year-to-date numbers through April. That's the first thing you can do. So I know, again, it's about a week early here, but we're going to be building on a theme over the next several weeks, and we want to introduce it with this. So what you want to do is when April ends and you, hopefully not you, or your bookkeeper, or whoever your qualified CFO or accounting person is, should have all of your transactions, your income and your outflow categorized, and your books are cleaned up through April. That should never take longer than the 10th of the following month. So you'll have good books. Pull a profit and loss statement that shows you January through April, the 4 month period. Compare it against your 2025 trimester one. So pull the same 4 month period from a year ago. Look at your collections per visit, payer mix shifts, staffing cost as a percentage of revenue. Now, that's easy enough to do. I'll explain that in a second. And any line item that's moved more than 10%. Staffing cost as a percentage of revenue is simply you want to take the amount of payroll costs that you have, and that may be in a couple of different places. Ideally, you have the cost of paying your staff gross wages above the cost of good and gross profit line as part of cost of labor. But you may, and in my books that I do for people like you, I basically have the expenses of running payroll, such as the employer's taxes and all that, down in the selling part. So, what you want to do is add all these numbers together and then divide the gross revenue into that. You're going to get a percentage or a fraction of the number one. And that is basically your payroll margin. And you want to keep an eye on that. But what I'm suggesting is to compare it against the same period in the previous year. See how that looks. If something is off, this is the trimester to find out why. Okay. And that is to say the one that's coming up May 1st through August 31st, which is the second trimester. If you're all the way to the third trimester and you haven't addressed this yet, then you're treating symptoms, not causes. Forecasting without a crystal ball. Okay. A credible forecast for the rest of 2026 starts with what actually happened in trimester one, not what you hoped would happen. Okay. So we're dealing with actual black and white numbers here. Review project revenue, payroll, and operating expenses through year end using your real run rates and decide what hires, equipment purchases, or retirement plan contributions the numbers will actually support. Keep in mind that there's going to come a point in your future where you probably would like to relax and retire with your spouse, husband or wife, and maybe do a little bit of traveling and exit your business, maybe in your 50s, maybe in your 60s. I know that a lot of people love what they do, but there may come to a point where you want to be able to enjoy the fruits of your labors in the young part of your life and enjoy your money in the future. There are a lot of tax deferred retirement things that you can do, and you do want to forecast into that. Okay. I can tell you that you can put away quite a bit of money into a 401k if you do this correctly. And that's something we could talk about it at another time. And certainly, if you have any questions about that, reach out. I'll talk about that at the end too. Cash flow is oxygen. A forecast tells you how much you have before you need it, not after. Okay. Tax strategy without last minute stress. Now, I basically built this practice on this tenet, and it's going to continue to be a linchpin of what we do here at Owings LLC at all times. I believe that every one of my clients looks forward to tax season, or they should. If they've only been with me a year and we're still straightening things out, they could be different, but um, you should look forward to tax season as a measure of your performance metrics and not as a time to stress out and basically cost yourself a lot of money. One, you should be making estimated tax payments based on your business's performance each quarter. And those quarters are a little offset. They are April, June, which is 2 months later, and then September and January the following year. You want to make estimated payments each and every one of those quarters. Now, you may have owed a lot in April, and that's where your cash went. That's fine. But this is why second trimester thinking is also critically important, is because two of the four estimated tax payment deadlines fall in the second trimester, June 15th and September 15th. Okay. Now, I beg your pardon. That's not right. September 15th is 15 days after the end of the second trimester, but that is still the period in which you're making the money that you are measuring and estimating. And what you do is you estimate your income for the entire year by simply multiplying by a factor, then figure out the tax on that amount, divide by that factor to figure out the tax payment you should make. Of course, subtracting the payments that you've already made up to that point. Okay. So that's how you do estimated taxes, simple Cliff Notes version. We go into a very detailed annualized process here. And if you'd like to have more information on how we do that, I'm always open to that conversation. So to wrap up then, oops, sorry, tune your practice during the relative calm. Tax season's over. And for a lot of my physician practices, the winter brings quite a bit of business, especially if you deal with infectious diseases or the flu, or um, if you're in the psychiatric fields. The holidays can be kind of a stressful time, certainly because a lot of people go through anxiety and other thought processes during the holidays. It's not everybody's favorite time of year, but and it certainly can be busy. So during the relative calm of the second trimester, use this breathing room intentionally. This is the right trimester to review scheduling templates, renegotiating vendor contracts, audit your billing cycles, and document the workflows you've been meaning to write down for the past couple of 3 years. Okay. Operational fixes compound with interest, and a small improvement in May will pay you through December. So hopefully you found all this very helpful. This is the first, um, well, I'm sorry. I am going to be beginning a series starting next week, talking about the things that you can do to um, reach a high degree of guidance and fiscal clarity. Clarity is the word I write. Yeah, yes, in your practice over the next several weeks, and it all begins with trimester thinking. So, um, when we talk next week, we'll begin that series. But for now, I do want to add or remind you, or get back to something I mentioned earlier. If you do have a question, and or else a desire to have the kind of help that I'm already providing to a number of my clients to maximize the performance of their practices, We're coming to you on one of three media here, LinkedIn, Facebook, as well as YouTube. And if you note that all three of those have a comment capability. If you write more info or help or let's talk or something along those lines, use your creativity. We'll reach out and we'll let you know how to book a call with me directly. You'll be speaking with me personally at no cost for the first call. It's what we call discovery. And it's basically exactly that. We discover if we're able to resonate with each other, and I'm able to help you with your financial goals and needs. But I can tell you that I save practices an average of five figures in taxes a year uh, just through some simple practice procedures, and also save you a lot of stress and hassle. And remember that part earlier, I was talking about looking forward to tax season. This can be you. Okay. Um, you should not owe more than $1,000 to either the federal government or whatever state you live in if you're in one of the 41 tax states. So if you do, we should definitely talk. So reach out if you would. And no matter what, I hope you have an amazing rest of the day. We will see you next week on Wednesday at 8:30 a.m. Mountain Time for a weekly profit talk. So until then, have an amazing rest of your day and week. And if you have a chance, do something randomly kind for a stranger today.